All right, I'm testing the mic. Okay, it's on. Good. So this is an interesting article. It's not an article, it's actually a forecast. This was done by the University of Denver. It's the Mueller real estate market cycle forecast for the second quarter of 2022. So we're at the end of the first month of the first quarter. So this is good to see the projection or the forecast. Let me just make sure this is sharing the right screen. Got it. Okay, perfect. So what this showed was quarter two 2021, gross domestic product grew at 6.6% and consumer savings was over 4 trillion during COVID. That's a lot. And that's 4 times the historic rate of savings. So that growth, they're saying, should propel the US economy for at least another year or two. So now 22 through 2024, we should still be pretty strong because what they're saying is there's so much cash on the sidelines that's going to be looking for opportunities, look for deals. And there's strong demand for industrial apartments should continue, while retail is expected to rebound due to a surprisingly strong demand recovery as consumers have lots of cash to spend. Office is the one major question mark as the COVID Delta variants has further postponed returns to office. Actually, I thought that was over, to be honest. And I talked to somebody yesterday that worked for a big corporation, and they're not going back to the office till the 1st, even here in Florida, which was crazy. They never really shut down. But I guess the point was, if they said COVID shut down, then a variant of the same flu or whatever, then they couldn't just be biased towards one and not the other. So it's crazy. It's crazy. But so that's what they were saying, that the question mark for office is. So it was expected to recover a little better after Labor Day, but did not. Labor and material shortages are expected to constrain construction and keep most market in the growth phase. So we're just going to go through what this bell curve, if you've never heard of it, if I had my little whiteboard, I would draw it. I mean, it goes up and down and up and down, and it's cyclical. So it keeps going. It doesn't stop, right? It's just going to keep going throughout cycles, and each market's different. Each asset class is different, but there's 4 quadrants, right? So the first phase 1 is a recovery, right? So this is when after a recession and things are starting to come back up, right? It's recovering. It's going into the phase 2, which is expansion. So after it's recovered, there's a lot of activity in the expansion phase is happening. And this is national property type. So this is actually for the second quarter of 2022 of where we are at nationally, because we'll break these down by each asset class. And I'll explain this. Here's actually a better explanation of this. But since we're on this one, it's the national forecast, and then we'll break down exactly what this means. But then the hypersupply, it means there's an overbuilding, right? And then it goes into the recession. So either interest rates change or some sort of crash that affects, and then there's so much supply, so it negatively impacts valuations, and we go into a recession, right? So right now, retail, more or less malls, because people weren't out going shopping, retail businesses were shut down, right? So they're in a recession now. Industrial and retail neighborhood, right? Here it shows a neighborhood retail, so it's different than a regional mall, right? But apartments, they're in an expansion. Industrial, but different. Like here's industrial too, and this is a flex. So there's different types of industrial, right? Like warehouse. So an example, like Amazon distribution centers, they call them last mile distribution, right? Those have been so popular. Those are an expansion space because there's a need to get out inventory quick, and everybody's ordering stuff to their house instead of going out shopping. So that's in an expansion. But then the flex warehouse, that's a different type of industrial. That could be an owner user building. There's different types of flex buildings, but suburban office is also in the hyperspot. So this is again national. And then just to break it down a little further, or better explanation, like I said, was recovery is declining vacancy. There's no new construction, right? So the vacancies are declining, right? So that means buildings are getting full, right? And it's trending up into the expansion. So then during this, the vacancies are still declining and there's new construction, right? So you'll see apartments getting built on every corner until it gets into this phase where there's just too much construction, which leads to supply that has overfilled the demand, right? So now there's so much inventory and the vacancies start to increase, right? Because just think about it. If there was a need for 100 apartments and you only had 50, well, then the demand is there, right? And the vacancies go, 50 are going to full. Then if you keep building, and now there's 200 built and you only have 100, well, guess what? Now there's vacancies going, right? So that's just a small example of what happens. And then obviously as the increasing vacancy goes, more completions, it goes into the recession, right? So this is a good little chart that shows that. Now, if we break down, here's office. This is going to go down each asset class with the markets, right? So right now, Fort Lauderdale, as far as office is in a the expansion, right? So you see Fort Lauderdale, and then all these markets right now are in hyper supply of office. So Orlando, Palm Beach, Cincinnati, you even have Honolulu in there, Tampa. So there's a lot of office. Now there's a recession already happening in these markets for office, right? New York, Seattle, Los Angeles, Dallas, Fort Worth. So there's a lot of markets that already are in a recession, and that's for office. So industrial, as you can see, there's a big right now expansion phase, like we were just talking about. But there are quite a few markets that are in the hyper supply, so they've already overbuilt or are overbuilding. And this is for industrial, right? In some of these markets, you see here, there isn't a recession or recovery in these. Obviously, this is something that just took. You see the little 8 right here. So it's still in these markets, there's still quite a bit of room for expansion. Apartments. Apartments are always going to do well for the most part. And that's why you see still they're in an expansion. Some of the hyper supply you do see, New York, Long Island, but expansion is, across the US, from Atlanta, St. Louis, Tampa, Orlando, Jacksonville, a lot of Florida markets, Fort Lauderdale, even Detroit. There was a lot of jobs coming back in Detroit. They're offering a lot of incentives there. So apartments, are still healthy, across the board. None have entered a recession yet. Now things will change with the interest rates. I'm not sure when this is for quarter 2, 2022, but interest rates will start to tick up. That will affect some of the valuations, but overall rental increases are going to go up 0.1%. Across all the asset classes. So this is retail. The retail market for second quarter is coming back, as was mentioned earlier. So there will be an expansion. New businesses will arise out of this. The ones that got hurt, they'll be replaced. But hyper supply in Palm Beach, Miami, Austin. I'm going to send this. I'm going to put this on where you can just download this sheet. So you can just download it on the portal. But this is just a good overall. Obviously, it's not going over every asset class, right? You don't have your assisted livings, the mobile home parks, storage facilities, those, but this is just the 4 main food groups there. And this is the analysis explanation. You guys can just read this at your own pace here. I won't bore you with an entire page of me reading, but this is good. This will just explain it, and again, it'll show this bell curve that shows where we're at right now. So we will, we are not getting into a hyper supply, which will, we will be heading towards a recession at some point, but hope that was helpful. If you didn't know what that was, again, this will be in the portal there for you to download and read through, and see what markets you might want to target, right? What's growing, what's got hyper supply, where's the expansion. Maybe you pick, you're an asset class that is in the recession right now in the market, right? And you can help those owners transition out, right, if they're in trouble. So hope that was helpful.